All right, let's dive right in. Today we're tackling a question I think every investor asks themselves at some point. How can you take a modest amount, say $1,000, and invest it with the same kind of thinking as a legend like Warren Buffett? And this is a great question, right? Because it brings the strategies of the world's greatest investors down to earth. You don't need to be a billionaire to start thinking like one. So, what's the one stock that our source material points to, a Buffett-backed company that looks like a top pick right now?
And there it is, Chevron. Now, this isn't some random pick. It's a company that Buffett's own firm, Berkshire Hathaway, has owned for years. But according to the analysis we're digging into, the situation right now is what makes it a really interesting opportunity. So let's unpack exactly why that is.
Okay, so first things first. Why this specific energy stock? Why is it getting the spotlight? Well, it all boils down to finding that perfect sweet spot between a fantastic company and a fantastic price.
And this right here is the classic Buffett philosophy in a nutshell. It's not about chasing the latest fad or hot stock. It's actually pretty simple. Find a solid, well-run business, buy it when the price looks good, and then just be patient. That's the framework we need to keep in mind for this whole Chevron idea.
And here's where that attractive price part of the equation really comes into play. You see, while the energy sector has been on a bit of a ride, Chevron stock has actually been trailing behind some of its competitors lately. Now, for a value investor, that's not a warning sign. It's a dinner bell. It could be a signal that a great company is on sale. Which brings us to a really compelling number, 4.5%. That's Chevron's dividend yield right now. And what's important is that this is near the high end of its own history. A higher yield often means the stock price is relatively low. So, the takeaway is, you're getting paid a really strong dividend while you wait for the rest of the market to recognize the company's value.
So what is it you're actually buying when you invest in Chevron? I mean, we all know Buffett's rule number one is to understand the business. So let's crack this thing open and see how it works.
The key thing to understand is that Chevron isn't just a driller. It's what's called an integrated energy company. And that one word, integrated, is so important. It means they have their hands in every part of the energy industry, which gives them a kind of stability that's pretty rare in such a volatile business. And this visual lays it out perfectly. Upstream is the part you probably think of, pulling oil and gas out of the ground. Midstream is all about moving that energy around through pipelines and ships. And downstream is where they turn it into the stuff we use every day, like gasoline, jet fuel, and chemicals. The beauty is, when one part is struggling, another part might be booming, which helps smooth out the bumps.
So when you put all that together, this integrated model gives them some serious core strengths. They're not just tied to one region. They have assets all over the world. They can be flexible with where they put their money. And maybe most importantly, they have one of the strongest balance sheets out there, which is kind of like a financial superpower.
Okay, let's talk about the reward. Because a strong business is one thing, but a business that consistently shares the wealth with its investors, that's another level. And what I've found really amazing is just how consistent Chevron has been over the years.
I mean, just think about it for a second. Think about all the crazy ups and downs in oil prices, all the recessions and global crises over the past 4 decades. Through all of that chaos, Chevron has kept up an incredible promise to its shareholders. What does that promise look like in practice?
38. For 38 consecutive years, Chevron has increased its dividend payment. That's just a stunning track record. It says so much about their financial discipline and the incredible resilience of their business model.
So you might be wondering, how on earth do they manage that? Well, this chart here tells a huge part of the story. You're looking at Chevron's debt-to-equity ratio, and as you can see, it's way lower than its competitors. In plain English, that means they owe very little money compared to what they're worth. This is that financial fortress Buffett loves to see. It gives them the freedom to keep investing and, crucially, keep raising that dividend even when times get tough.
All right, let's shift gears from the long-term why to the more immediate how. The source material we're looking at also gets into the tactical side of things, outlining a few possible entry points based on the stock's chart. Now, it's really important to remember, these are just potential strategies, not guaranteed wins.
So this table lays out 3 different ideas. The first one, range support, is about buying when the stock is near a recent low point, basically betting that it has a solid floor underneath it. The second, breakout, is for traders who like momentum. You buy as the stock pushes past a recent high, hoping it's about to run even higher. And the third, weekly pullback, is a more patient approach, waiting for the price to dip a bit before getting in. Each one fits a totally different style.
Okay, so let's zoom back out and think about the big picture. Why should any of us even consider putting money into a sector that's so famously up and down?
Look, the biggest argument against a stock like Chevron is always going to be the volatility of energy prices. No doubt about it. But the source makes a really compelling counterargument. Energy is literally the engine of the global economy. It's not going anywhere. So having some smart strategic exposure to this absolutely essential sector is a really important part of building a truly diversified portfolio. So let's wrap it all up. The case for Chevron, based on this analysis, really stands on these 4 legs. It's a stock a legendary investor believes in, its business model is built from the ground up for stability, its finances are rock solid, and it has an almost 4-decade history of rewarding the people who own it.
And all of that brings us to the final question, the one for you to think about with your own investments. Could a stable, high-yield player in an essential industry like energy be the missing piece in your portfolio? It's a powerful thought and a great place for us to end. Thanks for tuning in.